Okay, all right. I think it's recording now. Okay. So like I was saying, if you have those knowledge of smart money, just keep it aside. Let's approach this bootcamp with a clear mind. All right. So now, market structure and trading range. So I believe from our first bootcamp, we actually talked about trading range. This is the range because range is one of the checklists of smart money. All right. So now, how do we trade market structure and your trading range? All right. So yesterday we all agreed that we have three types. Basically, we have three types of market structure. That's the bullish market structure, bearish market structure, and the ranging market structure. All right. So uptrend, downtrend, and what ranging market structure, all the same. Whatever you want to call it, it's all good. Okay. So we all agreed that we had three basic types of market structure. All right. So now, and we were able to identify some market structures, right? And some of us give it definitions of what they understood by what market structure. All right. So now, majorly today, I'll be talking more on trading range. Range, yes, because range and market structure go hand in hand. Because if you can't get your market structure properly, then your trading range will always be a problem for you. Okay, because like I said, market structure is just like the market nomenclature. So if you can't get that market structure right, then definitely your trading, you will not be getting that trading range. Okay, and the strategy that we will be using will be unveiling to us tomorrow and next tomorrow for indices and forex. Market structure and trading range is very, very, very important. In fact, as a trader, knowing your market structure and trading range, you are 60% okay to trade the forex market. Knowing the market structure and your trading range. Okay, so all other stuffs, all other complex terminologies, liquidity, whatever you call it, internal liquidity, dynamic liquidity, and stuff like that. Or they are all encapsulated in market structure and trading range. Okay, because no matter the liquidity sweep, no matter the internal or dynamic or static liquidity sweep that you'll be seeing, all happens within the trading range. All these things happens within a trading range. So if you can identify this trading range, then definitely you are 60% done with your market analysis. All right, so quickly, let's get to the charts quickly. We all know that from our very first bootcamp, for those of us that attended our first bootcamp, okay, if we have a bullish market, okay, bullish market. Now, somebody should quickly tell me what they understand by range. When I say range, what do you understand by range? Basically, range. I don't need hot definitions. I just need the basic definition of range. Yes, somebody should give me a basic definition of range.
Equal highs.
Sorry?
Equal high and equal low.
Equal highs and equal lows is trading range, right?
Yes, sir.
Okay. Another person, I think that was who said that?
I said it.
Your name? Mr. Soki, Mr. Bala Samuel. You are from Zimbabwe, right?
No, sir. Nigeria.
Okay. Oh, okay.
Good evening, sir.
Yeah, evening, farm.
Yeah.
Mr. Godwin.
Good evening, sir.
Yeah, is the gap between a high and a low? Is the trading range?
The gap between a high and a low. Okay. Let's go. Next.
Previous high and low.
Previous high and low.
Trading range is the gap between the high. We have the high and the low. So it's just the gap, a range between the high and the low.
The range between the high, you are still putting that range between high and low. range between high
That
and low?
means we can say the premium and discount area of a price.
You are beginning to say things that are confusing me myself.
Coach, coach, I think it is the swing guy and the swing low.
The swing high and the swing low. Is it just the swing high and the swing low?
Okay, yes,
Understand?
it's a swing high and a swing
Understand?
low. If market is going in a bullish trend, is breaking the highs, is breaking the range, and the swing high at the range
Mis-
top and the swing at the range down.
Mr. Ghost time, you're already confusing me. You're confusing me already.
Hello, sir. Can I?
Yes, fam. Yes.
Okay, sir. For me, I think the range is shows us the significant movement of price from a particular point to a different point, creating highs and lows, or lower highs and lower lows.
Physicist. Okay. Thank you. Next question. Next answer. Next answer. I need somebody to give me another answer.
Hello, sir.
Yes, fam.
Good evening,
Okay.
sir.
Somebody said range is the distance between a newly formed high and its previous established lower low. Okay. Thank you. I love that. I love that. Higher low to higher high is bullish trend, and lower high to lower low is very strange distance. This is your definition. Is this a class? Is this a classical physics definition? Okay, I think
Okay, can you hear me?
yes, Pastor Chinedu.
Okay, a range is a defined section that has an equal highs and equal lows.
Okay. Thank you, fam. Let's go. I need two more answers. Two more answers. Two more answers.
Hello, sir. Good evening, sir.
Yes, fam.
Yes. To my own understanding, range is gap between two swing points. Like in a bullish market now, the gap between high low and higher high is what is called range.
Thank you, fam. That's as simple as that. As simple and easy as that. And I also love Mr. Is it Mr. or Mrs. now? Uyabeme O. She said or he said range is distance between a newly formed high and its previous established lower low. I love that. Or simply the distance between a swing high and a swing low. So from this this drawing here, range is the distance between this low here and what this high here. Okay, so range is simply what distance between this guy here and this guy here. That is this higher low. Here, this is the low, this is the high. Okay, now your other range again is what the distance between this higher low and what and this what the higher high. Distance between this higher low and this higher high is called what? Is your range. Distance between what? Two swing points. Distance between the swing points, just two swing points, as easy as that. You don't need to start making things too complex. Okay, so that's what we mean by what trading range. The distance between what two swing points. Okay, for a bullish trend, we have a low here, we have a high, we have a higher high, we have a higher low here, we have a higher high here. So the distance between two swing points is known as what? Your trading range. Okay, so let's get that. So now, market structure and trading range. We know that this guy here is a market nomenclature, because already as a trader looking at this bad boy here, you can easily say that this is a bullish trend. So if you can identify that this bad boy here is a bullish market, that's what it's showing you that what you can identify what that market structure. That's what a market nomenclature. All right. Now within this market structure, you can find what your trading range. A trading range is simply what the distance between what two swing points. Sorry, somebody said, oh, all right. So like I was saying, we have two swing points. We have trading range inside the what? The market structure. All right. So here, since we can identify that this guy here is a bullish market, I don't think there's anybody here who cannot identify that this bad boy here is a bullish market. Please, if you can identify your market structure, you should refer back to Bootcamp 1 of VTN. We have the videos free on the Bootcamp channel. You can just check it out and watch for yourself. So this is a market structure, and identifying your trading range, like we've said, is what the distance between two swing points. Okay, so for bullish market, it's distance between a higher high and a higher low. While for a bearish market, it's distance between a lower high and a lower low. So identify market structure and your trading range forms 60%. 60% of your market analysis. So don't fret already, because definitely after here we'll go to the charts and identify these things, because definitely you won't see all this drawing. You'll not be seeing all these perfect drawings on your charts, right? It won't be picture perfect. It can be picture perfect. So you always see those like rough movements of price. Okay. All right, fam. So please, if you can still hear me, I need you guys to drop a 1 on the chat. If you can still hear me, drop a 1 on the chat if you can still hear me. All right. Thank you, fam. Let's go. I love that. Let's go. All right. So now, how do we identify our trading range after identifying our market structure? Now, like I said, these two basic terminologies are what will form the base of a strategy that we'll be using tomorrow. Thank you, fam. So thank you. Okay, so these two guys, market structure and trading range, forms the base of what we'll be using tomorrow for our indices and forex market strategy. All right, so I want us to understand market structure and trading range very well before we move into any of those strategies that we talked about. Okay, so now the next thing I want us to go directly to the charts now. Identify our market structure and identify the trading range. So like I said yesterday, remember I said yesterday that if we are looking at a point of interest, for example, we are looking to get another swing point from here, maybe price is retracing, right? And we are planning to get our next buys from this point of interest. Definitely, if this guy, like I said, if a higher low does not have a valid higher high, valid higher high, then that higher low is invalid. Like I said, we'll go into the charts and we'll see. I think we saw one yesterday on was it V10? I think it was V10 yesterday. All right. So, but today we'll be going more deeper into the chart so that we can ask questions. Okay, get to see these things, how these life markets actually play out using just market structure and trading range. See, just imagine that you don't even have any idea of smart money checklists. Let's look at the market in a very basic manner, because so many times we complicate things for ourselves, whereas these things are just as simple as they are. All right. So remember yesterday I said if a higher low does not have a valid higher high. Now this is what I mean. For example, yesterday I said something like this. Okay. Now you all agree that here we have a low, here we have a high. Here is a higher low, but this bad boy here didn't create a new high, right? It didn't create a new high to give us a higher high. Okay. So, but when it came back down, it gave us what? A higher low. Now, when price is coming all the way down to this region, when price is coming from this region back to this region here, one we're looking at, okay, let me take an entry from here. I want to take an entry from here. I want to what? Take an entry from here. But mind you, this, in most cases, this guy here might have what? A complete price action, and you want to take an entry from here. And sometimes you see this, but maybe you'd have your stop loss here. Then you see that wick out. That wick wicking you out of this region all the way. Then this guy will take you all the way back, probably close and respect structure here. But what has happened? This guy actually wicked you out. Okay, smart money guys will call it liquidity. We know it's liquidity sweep. We all know it's liquidity sweep, right? We know that. But let's trade this in a very basic manner. If this bad boy here, which was the last higher low, does not have a resulting valid higher high, then do you think this guy is valid? Then it's not valid. It's never valid. So in most cases, basically, what happened was this guy just came all the way down to what? Play out of what? The original structural point here, before what? Giving us a new what? A new higher high. As simple and easy as that. So let's take, for example, we had no idea of what liquidity sweep is all about, but we had that basic knowledge of what? Market structure. So in most cases, what we just complicate things, saying is liquidity sweep and the rest is just what? Basic market structure playing out. Basic what? Market structure playing out. All right. So now, farms, if we all agree that this guy that came down here was just basic market structure playing out. Now, we know that this is this market structure now is what is bullish, and we already have what? Market coming here to give us what? A higher low before what? A new higher high. Now, our new trading range becomes what? This bad boy here and this bad boy here. Now, I want to ask a question. When market created this, what was our trading range? Let's take this guy out. Let's take this guy out first. Let's take this guy out. I need a lady to answer me now. I need a lady. I need a lady, not a guy now. Not a guy. Here we had our range from here was our range. A low here and a high here. Right? Now, from this guy here to where is our new trading range? From here to here. Where's our trading range? Somebody should tell me where our trading range is here. A lady, preferably.
Coach.
Okay.
Our trading range is the whole of the remaining part. From that point where that cursor is to the last to the higher
here,
high.
Okay,
Yes.
here and here, right? Here and here?
Nope.
Okay, here and
yes, to the last, to the higher high, to
yes.
This
one here.
Yes,
okay,
yes.
but why are you not using here and here as your trading range?
Okay, because that one did not create a valid higher high.
Higher high. Okay.
Yeah.
Okay, and since this guy did not create a very high high, so this, why didn't you use your range from here, from this region to this region? Or because this guy?
Yes,
okay.
because we consider that place to be a liquidity that is likely going to be taken out.
I don't want to hear liquidity, mom. I don't want to hear liquidity. I don't want to hear liquidity.
Okay. It is not.
You see, you were right. You see, when you're talking about, let me explain this for you basically right now. Okay. Because this idea of liquidity, we know it's liquidity. But basically, I want us to look at this in a very basic manner using market structure. Okay. You said your trading range. The reason why I'm actually merging market structure and trading range is because some of those things, some of you guys might be seeing as too complex, are actually very, very simple. Now, you guys agreed that from here to here is what? A trading range. All right.
Yes.
Now, but you're not agreeing to the fact that from here to here is a trading range, but here to here is what your trading range. Why? Because this guy did not create a new higher high, isn't it?
Mm-hmm.
That's why you're not looking at this region as a trading range, isn't it? Now, if this guy is not a valid higher high, and this guy is also not a valid higher low, isn't it? So why then? Why? So when price is coming all the way back, when price is coming back all the way here, right?
Mm-hmm.
So why then do some traders consider this region as a point of interest, not this region?
Okay. Maybe because they don't understand the structure.
The structure, because that's a structure. Now, another question for smart traders. I hope all the smart traders are in this house. I want, because they know. So I want all the smart traders to be very vigilant here, because there are questions I will train to all the smart money traders here. All right. Now, market structure, trading range. This bad boy here was a higher low. All right. But the resulting higher high, this guy didn't create a new high. All right. But mind you, this guy here currently has this bad boy here you are seeing here has a complete price action. Smart traders, please, I need an answer. Let's assume this is an Euro USD chart. All right. So I came to my charts. I saw that price created the high here, higher low. Now also I got that higher high here also. Okay. Now here I have a complete price action, probably because now before this move up here, this guy actually had filled all the price actions here. They are complete. Okay. So now when price is coming all the way to this region, in most cases we consider this region as our point of interest, because we'll say that price action here is complete. We'll say maybe imbalances, KOB or such there are imbalanced. All right. So we're looking at this region as our new point of interest. And if you are a very good currency trader, you would agree with me that in most cases, when you have your stop losses here, these guys come down and give you a week out. Then you'll be like, since this production here is complete, why did they still come all the way beneath this bad boy? I mean, if you've ever asked yourself this kind of question before as a smart trader, drop your one on the chart. If you've asked yourself that question, why this guy here has been completed, but why did the price still come all the way down to give us a week? And in most cases, they will still expect this structure. If you've ever asked yourself that question, that why did that happen, and you've had your stop losses here taken out before, then price still come back all the way to close to expect structure and go all the way up. Please drop your one on the chart. Drop your one on the chart. Okay, we have just 4 persons. Okay, 3. Okay, 4. Mr. Samuel, Mr. Chibukin, Mr. Adamu, and Mr. Bright. Okay. Pastor Chinedu also had witnessed that. Mr. Ethan, Mr. Ayodeji. Okay. So you see, as you all know, I'm not forward dive. Pastor David, so your choice is forward 9. All right. So you see, guys, I'm not saying, you all know I trade smart money. All right, I trade smart money. I'm not rubbishing. Smart money is that perfect setup, is that perfect strategy, right? But here, there are some basic things that we've actually neglected while trading smart money. There are some basic things that we've actually neglected. Okay, now you see, there's a reason why you see there are these box traders. There's these box strategy traders. You see, the reason why I think statistics shows that they are actually, I think, let me not say one of the best, from statistics that we had from what are these people called now? What are they called? My FS book. All right, this FS book, those guys actually have the highest percent win rate when it comes to forex strategies. They're actually above smart money, actually. Okay, I'm not saying it's not because that strategy is actually better than smart money, but it's because that these guys, in as much as they have knowledge of their strategy, they actually never forgot about the fact that market structure is actually the 100% market analysis that you can get out there. Okay, because you can see smart traders. In fact, these days, what you see smart traders doing, once they see that BOS from any time frame, what they do is they hop in. 70% of smart money traders don't even care about market structure again. What they're after is you see, what I want to see is that BOS and liquidity sweep from any time frame, and what they do, they take it. Then the next thing you see stop loss hit. Maybe they're out, or maybe I think some guys don't even use stop loss these days. Okay, probably they are open-ended traders, or I don't know, as a smart trader. Okay, now you see some money guys, after seeing a BOS and probably a liquidity sweep at maybe M15 or M5, they hop in. And at the end of the day, price takes them out. What you start hearing is this smart money safe. Please, I don't understand. That's because we've neglected the market nomenclature. I don't think there's any trader. I think smart money traders a lot, they neglect the market nomenclature. That's one of the biggest problems smart traders are facing currently. So this is the reason why we want to take us back to the basics, because we've actually forgotten the basics. We know there's liquidity sweep, right? We know that there's market break of structure, but what is the current market nomenclature? You see, most times you see Pastor Dami asking some mentees that why are you looking to trade from there? You see most smart traders dropping charts. Okay, because you saw a BOS there. Okay, now why are you taking that BOS? Why are you taking that break of structure? So this is an evidence that smart traders have neglected completely the market structure, the overall market structure. So hence we need to go back to the basics and understand these things properly. And in order to understand that, we need to zero our mind from those smart money. Let's assume that we don't even know what smart money is all about. Let's understand what market structure. Let's understand what trading range. You see, most times, in most cases, while I was taking some of the elite traders, I told you guys, for me, what I've done over the years, let's take for example, I have a daily time frame POI. Okay, and I'm waiting for a H1 break of structure. Now, I don't always use that H1 break of structure. That H1 break of structure is just an additional confluence for me to know that this guy wants to change character. Probably if it was buying, that BOS on lower time frame is just confirming for me that market wants to change character, either from bearishness to bullishness. I will still use my overall trading range. You see, most times you see that you have a trading range from daily. Then probably you saw a BOS on M15 or H1. Okay, you are taking that H1 and you are using that H1 stop loss. The high of that H1, you are using the stop loss. Then you still find out that price might sometimes still weak you out a little bit. You understand? But still respect the overall range. If this has happened to you, drop a 2-2 on the chart. You saw a hard time POI and you took a BOS from M5 or M15. At the end of the day, price took you out, but still respect If this has happened to you, drop it into the chat. Like, I have H4 point of interest, right? But on my lower time frame, which I was looking at a very nice BOS, before I know it, price took me out, but still respected my overall range. Yeah. Now, let's take, for example, we're not looking at the BOS. Okay. Mind you, your trading range. Now let's do this so that you guys will understand very well. I have this guy here as my H4. I have this bad boy here as H4. Okay. H4 4 hours. I have this guy here as my H4. Okay. And just like we know it, we'll say here should be what our potential area for what? For buys or for accumulations, right? Here is actually what? Our potential area for accumulations. All right. So here is what our potential area for accumulations, or let's not use accumulation. Let's just use buys now. I'm looking at here to what? Take a buy. All right. So remember that your trading range is what? From here to here, isn't it? This is your trading range. This guy here, okay, and this bad boy here is what your trading range. Okay. So now, when price was coming all the way down, price was coming down, right? Just like this. Price was coming all the way down, giving you those movement all the way down, right? All the way to this region now. Now, when price got to this region, price got here, right? And on M5, let's use this on M5, on 5 minutes, you've seen that clean BOS. Okay, price did this already. Okay, price broke structure. All right, and what? It's coming back for retest. Probably you have placed your buy. That was sweet buy from here. Okay, let's leave this guy here. Okay. Now, mind you, at this region here, you've seen this 5 minutes BOS, and you are what? Already taking what? You are taking this buy, this 5 minutes buy here. Please, can you guys still hear me?
Yes, sir.
Yes, I.
Okay, all right, fine. So now you're looking at this 5 minutes buy already, because price at what? Currently at your POI. Now, for me, over the years, I don't actually use this stop loss here, because most of you, in fact, so many guys wants to get, maybe those guys that want to get 1 to 15, 1 to 20, 1 to 45, or something like that. It's cool, actually. It's very, very cool. Okay, having having a high time frame POI and using a lower time frame entry. All right, probably you might have your stop loss here. Okay, your stop loss is there. All right, and that stop loss is what? Is at this region, because you've seen this bad boy here. Your stop loss on M5 is here, but on H4 is still what? Is still here. Okay, because price has given you what? A BOS. Now, what happened? In some cases, you will see, in fact, if you trade coins a lot, this it happens a lot. You will see price come all the way down to what? Weak out your stop loss here. To weak out your stop loss. Now, in fact, most of you will say it's manipulation. It's not manipulation. It's not manipulation. All right. Remember, your trading range is still what? Intact. What you are seeing is just what? A change of market character on 5 minutes time frame at your point of interest on H4, isn't it? So but now, because we are smart traders, we have this knowledge of, okay, I'm waiting for this area for accumulations. Once I see the 5 minutes accumulation at this region, I'm going in my stop loss at this region. But mind you, if you were a that structured trader, if you were a structural trader, like you have that market structure and trading range, right? if you are actually having the market structure and trading range in your position, okay, this guy here, I'm actually looking at market structure and trading alone. I'm not looking at change of market character at my POI. Just like smart money traders, will look at change of market characters at their POI. So this bad boy here, this guy, this Mr. A here would have been kicked out. But even though I saw this change of market character, I'm taking my entries here, but my stop loss is at the overall trading range. See, this is the reason why you see some of these box traders or BTM traders are actually more profitable than spot money traders. Yeah, that's statistics. I'm telling you, that's market statistics now. I didn't do that. My Facebook actually showed us those statistics. All right. Now, this is because this guy here was actually using what? That market structure and the true range here. But this other guy here, he's correct because he actually saw that change of market character at that POI. He saw that, but this, in as much as in most cases you might actually see that price will come and also what give you that nice move. Okay, while sometimes you see that price will come and what take you out and still respect what this true range. So there is need for us to what always respect, no matter what strategy you are using, no matter what idea you have, whether smart money, if you use smart money, if you use BTMM or Wake for the rest, always what market structure is what is key. Market structure, the trading range is what is key. For those of you that know me very well, when I trade, I don't use my lower time frame stop losses. I use my what over because I will know that if a market is kicking me out, I want that market kicking me out. And after the market kicks me out, I should know that yes, I'm wrong. I'm actually very, very wrong. Not that this guy will kick me out. At the end of the day, I'll be right, but I'll be out of the market. So at this point, if market comes all the way to take out this low here, then we know that it's market doing its thing. It's market just doing what market does. Not that I was actually wrong. Because why I'm saying this is because this thing actually is what makes most smart money traders. I see the thing is because most smart money educators wants to make these things look sophisticated. Probably they won't want to tell you the truth about trading. All right, about trading with smart money. There's something one of my mentors used to say, Justice Saini. You see, he does not use stop losses within the lower time frame entries. He doesn't do that. I actually learned that from him. Now, he said, you see, market structure, we know that market structure is key. If you are looking at a change of market character at a lower time frame, okay, now, when probably let's say Mr. A, whose psychology is not that strong, Mr. A, whose psychology is not that strong, is having this region here as a point of entry. Okay, now he's willing to risk, let's say he's trading a 10K account and he's willing to risk 10% of his, 1% of his trading capital, 1%. Okay, remember psychology is very, very, very different. It varies from traders to trader. Okay, so Mr. A, who already risked 1% here, and the trade took him out probably in just in minutes, he's already out. Right? Now, when market comes all the way again, gives him another BOS. In fact, most traders, they will be so reluctant to take it again because they've already been burnt from this region. He was risking 1%, probably, but that 1%, this Mr. A here, who was using this stop loss, probably will be using 5 lots because he's risking a very tiny point or tiny pips here. But this Mr. B here, who's using the overall range, might be using a lower lot because of what? The number of points or number of pip stop loss that is he has calculated. Okay, but this guy here will be using what? That high loss because he has what? That tiny stop loss. Okay, see, nobody. No, let me tell you the truth of the matter, farms. See, nobody wants to know how many pips is your stop loss. Nobody cares. Nobody cares, and nobody cares to know how many RR you are catching. If you are catching 1 to 10, 1 to 20, 1 to 100. You see, the truth of the matter is just for you to want to be profitable. See, the truth is always bitter, but farms, that's the truth. Some mentors will not tell you that they actually used this range here as their overall stop loss. Because once price moves, you see them break even. Then maybe at here you will see someone come up and saying 1 to 65, 1 to 70, 1 to 100. I caught 1 to 100 on this trade. But nobody wants to tell you the truth that probably they actually used the overall range stop loss. But now I'm telling you that farms, as a smart trader, because trading smart money, it means you have to be smart. You have to be very, very smart. All right. So farms, as a smart trader, I would advise you to always use what? The overall range stop loss. Let these lower time frame entries be an additional confluence for you. Let it be what? An additional confluence for you. Like, okay, this guy wants to change character. Okay, I can actually take my entry comfortably here. But mind you, market structure is key. Trading range, market structure. This is what most smart traders have been missing out. If every time you're catching 1 to 65, 1 to 70, 1 to 80, just like some people claims that I catch 1 to 80, 1 to 65, 1 to then if you are risking 1% of your account, so that means you should be up like 100,000%. You'll be able to what, like, grow $10,000 to $100,000 in matter of days, but let's not deceive ourselves. Let's not what, deceive ourselves. Let this change of characters be what? Let them be an additional confluence for you. But I would advise that we should always what? Use the overall range stop loss. It helps a lot. It has helped me over time. You will see me and some of the guys taking trades. Before you know it, they say they're out. But I'm still very much in. I'm still in. Like currently the US 500 trade, I mean, all the guys I took the trade with, they were actually out because they were using what? They were using the stop loss from the smaller time frame entries. But what I do, I always use the overall range. I use the overall range. And as I speak to you, I'm still in that trade. All right. So it pays a lot to, because you don't want to deceive yourself. You can deceive other people, but you can't deceive yourself. All right. And as an experienced smart money trader, I'm advising you guys that always what? Make sure you are using what? Your overall range stop loss. I'm not saying you should go and use a big lot because you've seen a confirmation you're using a big lot. If this guy here is using 5 lot, then this guy here might be using what, just 2 lot or maybe 3 lot. It depends on the number of points or number of pips your stop loss is. Then you calculate your percentage that you want to risk in respect to what your lot size, your lot sizing. All right. So it is better to be using 1 lot here and you'll be on this trade till the next high than to use 5 lot here and in the next few minutes you are already out. Who cares? Who cares if you are using if you have 3 points to? Who cares? So far, that's the truth of the matter. I'm telling you, that's the truth of the matter. All right, that's just the truth. So before we move to the charts, I will entertain some few questions, maybe 1, 2, 3, or 4. Then before we move to the charts. Let's go, fam. Let's go. You can
Good evening, sir.
type your question. Yeah, evening farm.
Since if you are using the higher time frame range for your stop loss, how do you reduce price, the risk? Do you
The
refine
risk.
it?
You see, yes, definitely. If the way you calculate your stop loss, if you were using the lower time frame entry, the same way you calculate your stop loss. If you are using the higher time frame, you see. Now, let me quickly chip this in so that you will not go and say, um, I said something like that, please. Now, remember, for example, you can see, let's say price was coming all the way down here. You have your entry, you have this guy here as your POI. Now, this guy has not come to your POI already. This guy has not come to your POI. Maybe this guy, you saw price go to this region, right? And price is already giving you a BOS on 5 minutes. Then you now say, that coach in VTN says that if I just see that change of character at lower time frame, I should go and enter and put stop loss here. Market must definitely come to what? To your point of interest. When market is at your point of interest and you've seen that change of character, that's when you can comfortably go into the trade and what? Put your stop loss at the range low or range high. I hope that's understood.
Okay, you can use a lower time frame change of character and enter, but your stop loss at the higher time frame range low.
Yeah,
You can
exactly.
still use that lower time frame change of character and enter, but your stop loss should be at the higher time frame range low.
Exactly, farm. Exactly. So
Okay.
that if when price is taking you out, you will know that, because at this point, if price takes this guy out already, then that means the bias for that higher time frame has changed completely, isn't it? When price is taking you out, you know that definitely this guy has actually changed bias, not that you actually wrong.
But in your case, do you do risk entry or you wait for confirmation in the lower time frame?
Do I do what?
Entry. Do you enter aggressive entry on your higher time frame, or you wait for?
I don't do aggressive, sir. Not aggressive entry, sir.
Okay.
I wait for confirmations on the lower time frames, sir.
Okay.
Yes, farm. Yes, exactly.
And apart from change of character on the lower time frame, is there any confirmation that you use again in the lower time frame?
That's what I look out for. Change of market character.
Okay.
Yes,
Thank
farm.
you, sir.
Welcome. Let's go. More questions.
Hello, can you hear me?
Yes, I can hear you, fam.
Yes, sir. My question is, sometimes our point of interest is not at the very low of the range. It may be at the middle of that range. Now, are we still going to take, yes, maybe
Your
there
point of
is
interest should be at the middle.
I'm saying sometimes the point of interest can be at the middle of the range, not necessarily at the
So that
bottom
is
of
your
that
point of
range.
interest now will be somewhere here.
Yes, exactly. So
Really?
if the point of interest is there, maybe there's an imbalance, or I don't know, something that catch my interest, and I want to enter a trade there. Should my stop loss still be at the end of that range?
No, sir. Because you see, just like we taught you guys on the very first bootcamp, we said we have discount, we buy at discount prices and we sell at premium prices, isn't it? So taking a trade here, this is not a discount price at all. It's never a discount price. Okay, so taking a trade at a discount at a region, buying at a region where you can't find discount prices, then that's not advisable, farm. All right, so we buy at discount prices and we sell at premium zones, right? So
okay,
that's our questions, farm.
Thank you.
I think when we start, when we begin our strategy for the Suzuki indices, we will understand better. But mind you, I'm not saying that like usually smart money is not. Smart money is, for me, as I said, please quote me. I said for me, Smart money is the best strategy out there. It's the best forex strategy out there. It's the best. The best. Okay? But the reason why I'm taking us back to this, why I want us to actually for a moment, just for these 4 days, let's actually forget that smart money exists. Because I want us to understand market structure. So now when you understand this market structure and trading range correctly now going back to your smart money, it will actually improve your trading. Alright? So let's go. My question is, why is SMC recently? Who's saying SMC again? I don't want to hear SMC. I don't want to hear smart money concept here. Why is it playing 1 hour and 4 hour field of imbalance? I don't want to hear SMC here. Don't worry, when we are doing SMC, you can ask the question on SMC. But here, I want us to deal plainly on market structure. Okay? Market structure to the range. Market structure. Let's go. Questions. Any other question? You can unmute yourself and ask your question. You can unmute yourself. Or you can type your questions on the chat box.
Good evening, sir.
Good evening, fam.
Sir, looking at what you explained now as for price coming into our 4 hours POI, in a situation whereby after marking our range high, range low, and
yes, fam.
drawing the fib from the range high, the range low, like multiple other blocks, those points, can we pick those multiple other blocks to wait for the change on lower time frame?
Sorry, I didn't get that. Please, I didn't get that.
No, I said after our range high and range low, we draw our fib, and we notice we have, like, before the last order, which is like the extreme, we have another one at the discount level.
Okay.
Do we still wait for this change of character on lower time frame to place?
Yes. See, the reason why we wait for change of character at lower time frame is just for you to just like an additional confluence for you. To actually identify that, okay, this guy actually wants to change character from either bearishness to bullishness, or bullishness to bearishness. It's just like an additional confluence. Just like you have the indicator traders who say, I'm waiting for the blue MA and red MA to cross before I buy, right? So the same thing when you have a pot of interest. Okay, now on a higher time frame, for an additional confluence, you stochastic. For that, you want to wait for a change of market character, because we know that now before the daily we change trend, it will start from the seconds time frame. The seconds we change trend, then the minutes we change trend, before the hourly time frame we change trend, all the way to the 4 hours, the daily, monthly, weekly, just like that. Okay, so now if these 4 hours coming into this POI wants to change trend from this bearishness to bullishness, then 5 minutes time frame will start changing trend from bearishness to bullishness. So now when we see that confirmation, then we can actually take our entries from this lower time frame. But for me, I'm not saying you should also have your stop losses on the higher time frame range stop loss, but I'm saying it's the best. Over the years, is the best for me. Is the best. But mind you, you see some of the educators won't tell you that they actually use the overall range stop loss, and you won't know that because you're actually not trading with them. All right, but for me, I think over the years is the best. Like, is the best. So when market takes you out completely, you will know that not that you are wrong, because market just does its thing.
Thank you, sir.
Yes, from more questions, ladies. I think ladies they understood perfectly. We have lady gurus here. Okay, so quickly, let's move to the charts. Quickly, let's move to the charts. Let's move to the charts. So, like I said, you not always get this, like that picture perfect. You don't always get that. Maybe just get into your charts and you start seeing the way we are drawing it, like line by line, higher high, higher low, lower high, stuff like that. No. You will not always get like that. Okay. So now let's go farms. Market structure, trading range. Market structure, trading range. Now this is the daily time frame. This is the daily time frame for, I think this is class 1000. Okay, this is class 1000. Class 1000. Okay. So now farms, let's go. Now you could see that here we had, even at this bad boy here, we had this lower high here, we had this lower low, lower high, lower low, lower high, lower low. We had this low here. What happened? Market gave us that break of structure, right? Now, I think I love this cash 1000. And I think I want to explain what happened here. Okay. So now, farms, here we had what? A high here, isn't it? We had a high here. We had what? This higher low. Price give us this what? This higher low, isn't it?
Sorry, sir.
Price give us.
Can you please delete the 4H and the 5M so that we can...
Okay, all right, farm. All right, farm.
Thank you, sir.
Welcome. So, farms, so let's go. Now, look at this cash 1000. Here, we have this region here where price created what? A high here, came back, give us a low. Now, this guy didn't create what? A high. This bad boy didn't what? Actually create a high. He didn't create a high, isn't it? Now, price coming back all the way from this region. Price came back to this region. Now, when price was going all the way back, price didn't give us what? Another high. And someone might be asking that why did this bad boy, why did this guy came all the way back down to this region? Remember, this is the last valid what? Low here. That created what? A valid high. Just like I explained just now, price came all the way down to this region, okay, didn't give us what? A new high. So that explains that what? This region here is what? Is actually what? Invalid. Now, when price came all, now this now explains why price what? Cleared this region. Now, let's forget about the fact that this guy here actually gave us this equity here. Let's look at it as what? As market structure. Because this was our valid high, our valid low currently. But this guy that created a higher low didn't what? Give us an actual what? High. What happened? Price came all the way back to what? To still play out of what? That valid low. As simple as that. Structure. See, I don't want us to look at liquidity, look at stuff like that. Let's actually see, you can actually look at market structurally and also within your trading range, and you get your trade from there. Okay, so let's see more examples. Let's go to that chart. Please, somebody should give me an asset. Let's look at more assets. Let's go.
V50X.
V50X. Somebody said V50X. V50X. So looking at the structure here, we have from here we have
V100S, V100S,
okay. Don't worry,
V100S, V100S.
we'll get there, fam. All right, no problem. We'll get there. We'll get there. All right. So, farms, let's go. Here we had bullishness here. Now, mind you, here we had this lower high, lower low, lower high, lower low. Market give us that change of character, right? So now, farms. So here now, farms, we have this region here as what? As a potential region for what? For buys. Sorry. For example, we have this region as potential area for buys, isn't it? Now, when price go to this region, price would have given us what? That break of structure, that change of market character on a lower time frame at this box region here. Let's see if we can get that feed, if we can actually get that feed. Let's see. Let's go lower. Let's go to 1 hour. Let's see. 1 hour. Let's go. I hope we can get that feed. That's as far back. Far back. Okay, we are there. So farms, so look at it, farms. You see, this box here we had this what? Lower high here, and lower low here, and lower high here, and lower low here. What happened? Price gave us this, but now you see, when price came all the way here, price gave us a new high here. Now came all the way back down here. Created what? A new high. Now, this was what? A market what? Break of structure. Alright? So here we have what? We have our potential entries on H1 at this region. What happened? Price broke structure, changed character, came back all the way, and what? Gave us what? That nice buy from here. For me, if I were trading this, if I was on this guy, my stop loss will not be here. Not have been here. Right? My stop loss would have been at what? At that daily what? At that daily range. I will calculate my lot size according to what? My stop loss points or my stop loss pips. Understand? So if I'm actually having here maybe 1,000 points or 1,000 points here on 1 hour, probably on daily I'll be having what? Maybe 2,005 or 2,000 points. Okay, so if I'm to use, let's say, 3 lots here on this bad boy here, then on a day time I'm using what? Just 1 lot. It's safer. It's very, very safer there. It's safer having that. All right. So definitely remember, you can see we had that daily time frame POI. Now, and on H1, we are seeing what? That change of what? Market character. Market was actually selling all the way down. It was selling down, right? Like I said, before market change character on the daily, you first of all find those change market characters on what? On lower time frames. And you can see that from our H1, part of the change character, having this bearishness, right? Lower high, lower low, lower high, lower low. Change market character. Price came back all the way to what? Give us what? That bullishness all the way. Which resulted to what? That bullishness what? On the daily time frame. I hope that's understood. So let's look for more examples. Let's look for more examples on this time frame. Let's look for more examples. Okay, so now farms, let's go. You see here, when we have, let's take another example from this bad boy here again. Market structure alone. Market structure. No need for liquidity or other checklists. Okay, here I had market created this high here. You see, we had this lower high, lower low. Price gave us this BOS here, went all the way up. Now, a smart trader quickly would say, I'm having this region here as what my potential what entries. Now, when price came all the way up, came back down, right? Look at this. I don't want to mention imbalance. Not mentioning imbalance at all. So when price is coming down, you see, smart traders will say this guy here has tapped from this imbalance. Yes. Somebody will say this guy here already tapped from this imbalance. Right? Let me maximize this guy so we can see it clearly. Somebody will say this guy, this week down, tapped from this imbalance. Okay. And what happened? It gave what? That break of structure, even on this 1 hour time frame. Because if you mark up this guy, go to a lower time frame, you see that this guy actually gave what? A BOS. You can see it. Lower high, lower low here. Price what? Broke structure here. Now, on returning, we want to take your buys from here. But market structure. This guy didn't create what? A new high. So definitely anything you are seeing here is what? Invalid. It will always what? Come back to what? To the last structural point. Which it did. So this is purely this. Although this is one can actually explain this using smart money, but it's as basic as possible. You can use market structure, just market structure. Let's understand market structure before we start putting what smart money. So that those regions you were looking at those range you guys were looking at before as what? As a true range, it's actually what? A false range. Let's understand this. Let's understand market structure before we start diving into what? Smart money. All right. So let's go. Any other asset? Or any question?
Big Sunday 1S. Huh?
Okay, Big 100. Any question? Any question? Any question? Any question?
V100 1S. V100 1S. V100.
All right, we'll check it. We'll check it once. No problem. No problem. Now, V101X. Now, we can see all this bullishness. This guy gave us all the way. Okay, what happened? We got that. Here, we got that change of character from this region. Okay. Price kept giving us this. Now, farms, I think this is another explanation I'm seeing here already. Okay. Now, here we had this price gave us this lower high. Okay. We had this lower low, isn't it? Now, what happened? One would have argued that this guy actually what? Broke structure. This guy actually what? Broke structure here. Back again because we have this lower high, lower low. Price. One would argue that this guy actually broke structure again. And you want to what? And what does these guys know? Because these guys actually know that you are actually looking at this region now for a buy. They will give you what you want for a while. They'll give what you want for a while. They give it to you. You can see that they actually give us that rejection from here for 2 days before what they came back to what? To clear this region. Now here, if we have this is just purely market structure. Here overall we have our high here, our low here. Now our high here. This was what the last valid high, isn't it? This was the last valid high and low, isn't it? If we want to look at the structure, market structure holistically. If you agree with me, drop a 1 on the chart. If you agree with me, drop a 1 on the chart. That so that I'm looking at the market, and if you disagree, a 2 on the chart. If you agree, 1 on the chart. If you disagree, 2. I want people to disagree. You have to disagree, fam. If you disagree, 2. Let's go.
Coach, please, this is 1 hour time frame.
Oh, I know. Okay, I'm on time frame. Okay, you want us to go to the daily time frame, right? Is that what you want?
Yes, sir.
Yes, coach.
Yes,
okay. Sir. It seems so many guys are actually on. Is that you guys are on this trade?
I think so.
Yes, sir.
The way you guys are shouting daily, 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 daily. Okay. So let's go to the daily. Actually, I never realized that I was actually on the 1 hour time. I thought I was on the daily time frame. All right. So for those of us shouting, for those of us that wants our trades, that wants 100x. Now, what is the current trend of the market? What is the current trend of the market,
It's
folks?
ranging.
It's ranging. Now, looking at the structure holistically, what's the structure overall market structure? Overall,
Bearish, sir.
Bearish.
bearish. If you agree that this market is bearish, drop one on the chart. If you disagree, 222. Yeah. The structure is very clear, Pastor Dami. Yeah, very clear on each one. Very clear. It's very clear. Mm-hmm. Oh, somebody said, okay, so if you agree, if it's bearish, there's 111. If it's bullishness, 222. Okay. So we have 4 bullishness, 6 bearishness. Wow. That's nice. That's nice. That's nice. So some persons actually say that this is a bearish market, while some say it's a bullish market. You can change your mind though. Now that I've actually zoomed in, you can change your mind. Is it bullishness or is it bearishness? If it's bullishness, 222, bearishness, 111. Okay. Oh, you are still starting with your word. It's bullishness. Bullish, bearish. Mr. or Mrs. Uyabeme and Chibuking, please unmute yourself and tell us why you think that this guy is bullish. Why do you guys think that this guy is bullish? Let's go. Mr. Chibu and Mr.
Yeah, hello, good
Uyabeme.
evening.
Yeah, evening farm.
Yeah, I think it's bullish because it has already broken the last structural lower high.
Okay, and which is the last structural lower high?
The point on can you move your cursor backwards a bit?
Okay.
At that point, go up a little bit.
You mean here?
Yes.
Okay, so here is a lower high.
Yes. Right below is a lower low. And price has already broken through that lower high to form a new higher high.
Okay.
So the new range is between that point and the lower low.
Between this point and this point and this point.
Yes, okay. That's the new range.
Okay. Please, if you agree with what he just said, drop a 111. If you agree with what he just explained, that this point is a valid lower high, this is a valid low, price broke structure. Okay, so our range is now from here to here. If you agree, 111. If you disagree, 222. Disagreed? Okay. Disagreed? Mm-hmm. Disagreed? Okay. So nobody's agreeing. This is getting interesting. One, he agrees. Mr. Chibu agrees. Okay. Interesting. So, Mr. Bright, unmute yourself and tell us why you disagree with. Who was that? Was that Mr. Chibu or Mr. Who?
Hello, good evening, Coach.
Good evening, fam.
The reason why I disagree with him, that place is not a valid structural point. Before a market creates a higher low, or before a market creates a lower high, that market must create a lower low before it creates a lower high. So that place is not a valid point because it did not create a lower low before it created that lower high. So that place is invalid. It's still within the structure. So that is an internal liquidity.
Okay. Mr. Adamu, do you agree with what Mr. Bright said? You guys all said two.
Yes, sir.
Okay.
Yes, sir.
Okay. So we are agreeing that this point is not a valid structural point. Who else is in the house? Apostle Cliff. You've been muted. Apostle Cliff, are you here?
Yes, Coach, I'm here. Good evening.
All right. Evening, fam. So we have two guys saying here is a valid structural point. Now the other is saying here is not a valid structural point. So what do you think, fam?
The trend is clear overall. It's a bearish trend, and that cannot be a valid structural point.
All right.
Except he's playing from the range up high to the range up low, down low. Just from that very place your cursor is.
All right. So, Mr. Is it Chibu King or Mr. Is it Mr. Chibu King or Mr. Who? Or Mr. Uyabeme? I don't know. I think it was one of you that actually said these guys actually. Now, looking at this point here, it's not right. Go back to the bootcamp videos from our very first bootcamp. You understand this clearly. This guy here is not a valid structural point. It's not. Because now, looking at this structure generally, you see that this is a bearish market. This is what a very, very bearish market. All right. Now, you can see the price here give us what? This lower high here. See this guy here, lower low. Now, is this a lower high?
No, sir. It's not.
Somebody said yes.
No, sir.
No,
all right.
Not a lower low. It's not a lower
all
high.
right. It's a lower high. Okay. So here we have
why is not a lower? Why is not a lower high?
It was formerly a lower high until this second lower high invalidated it.
Data invalidated.
Thank you, fam. Beautiful. Like I said, you guys. I love this.
I love where the control invalidated it to create a new lower low. So
I love it.
That was what
I love the answer. Now, is this point a lower low?
No, sir.
If this point is a lower low, or drop 1. If it's not a lower low, drop it 222. If this point is a lower low, drop a 1. If not, 222. Okay. 1. Okay. We touch media said it's a lower high. It's a lower low. Okay. So, okay. Mr. Real Touch Media, tell us why you think that point is a lower low. And Mr. Joshua Beats.
Okay, sir. Before the part that invalidates the last lower high came in place, that lower low created a lower high.
Okay.
And that lower high created a lower low before the invalidation. That's why it will
Okay,
still...
Pastor Dami, this is the point. This point here. This point. Okay, so you mean because this point here had what? A lower high, right? So here is
Yes.
what? A lower low, isn't it?
Yes.
Okay. Okay. So that means if this point is a... But do you agree that this point is a lower high or it's not a lower high?
It is a lower high before
Okay.
this invalidation.
Okay, but now looking at this overall structure now, is this point a lower low or not a lower low?
No, it's not a lower low.
All right. So that means you are joining the guys that typed 2222. All right. So just like you said it, this who's 111 again? Okay. All right. Mrs. Mercy, please unmute yourself and tell us why you think this point is a lower low. I think this is the first time a lady is. I love that. Let's go. Oh, what do the boys know? Let's go. It's a lower low, okay.
Because
Okay, why is it lower low? Why do you think it's a lower low?
it created a lower high, and after it there's a lower low again. It's valid before, like what I had for the invalidation. After that lower low, there was a lower high.
Because after this lower low here, there was a lower high
Yes.
here, right?
Yes. Before it
Okay.
was invalidated.
Okay, so now you are agreeing that this point here is a lower high.
It was a lower high.
It
Let's
was
assume
or
this
it
one has
is.
not been. It was. It has been validated by this high here.
All right. So that means you are joining the guys that say 2222.
No. Are you talking of what happened? I'm assuming I've not seen this one, this high here.
Okay, you are
I'm
assuming.
assuming
Okay, now
yes,
let's not assume now. Looking at
okay.
this chart right now, is this point a lower low?
No.
All right. So that means you're joining the guys on 2222. All right. So looking at this bad boy now, you see this guy here is not what? It's not a lower low. All right. It's not a lower low. This is our valid lower low. We have a lower high here. We have a lower low here. Now, just like we know it, market moves structurally from one swing point to the other. So here we have our lower high, our lower low here, lower high, lower low. Now, where should be our next point of interest? This market is a bearish market. We all agree it's a bearish market. Myself and yourself, we agree it's a bearish market. So I will know that market moves from one swing point to the other. Now, so if this guy here is our lower low here, we have lower high here, lower low. So where should be our next swing point where we're looking to sell this market?
Top range, sir.
Where from? Top range, exactly. So we'll be looking at this bad boy here for our potential sales. Now you see, there is one thing with us is with traders is like they said, 10%. First market is 10% selling, 10% buying, and 80% waiting. Okay. Now, if some of you actually follow some of these big traders, for example, my favorite, QBanks, throughout this year he has placed just 2 trades on his asset. He trades just one asset. Throughout this year he has placed just 2 trades on that asset. He waits because if we know that market moves from one swing point to the other, okay, we know that there's what we call trading in the range, like trading within the range. There is that. You can do that. But what we call the high probability setups are those setups that what we take from one swing point to another. Those are the what high probability setups. But because you see, we always want to what actually like make scrums, make some things from the market. Okay, it's cool though. It's actually very very cool because right now we can actually get a trade from this from this ranging that the market is ranging. You know that from this region to this region, the market has been consolidating. But notwithstanding, we can still get some cool pips or some cool points from this market. But mind you, looking at this general market, this region should be a region where you're looking to sell. This is a high probability setup. This is a high probability setup. All right. So now, but if you scale down to a lower time frame, let's say 1 hour time frame, you can quickly get a good trade idea from this bad boy. Just like I marked out just now, just like I marked out here. So looking at this bad boy, we had a higher high here, higher low, higher high. Price came back again. You should know that price will give us that reaction from this region. And price, you can see price giving us. So now if this guy can give us something like this should be very very cool. This is not a trade idea actually. No a trade idea, farms. If we can get price to close above this bad boy here, sorry. If we can get something like this, right? Then to take price all the way to the upside, isn't it? This would make sense, right? Because at this region, we'll have what we have here. We'll have market giving us closing above this last lower high here. Okay, changing this character. Then it comes back for a retest. Then we can take this bad boy all the way to the upside. This is just simply structure. I've not said liquidity here. I've not said anything here, but it's simply market structure. So with the kind of market structure, then maybe knowing smart money will be an added advantage. But knowing smart money without market structure, seriously, you will go nowhere. I put it to you that knowing smart money without market structure, because in fact, if you claim you know smart money without market structure, then that means you are not a smart money trader, because smart money is market structure itself. All right. So farms, any other questions?
Hello, sir.
Yes, farm.
I want to go back to that daily structure that they debate on.
Okay.
And seriously, I get confused on that place.
Daily. This is daily, farm.
Yes.
So what's confusing here, farm? What's confusing? Let's go.
Like that previous lower high and lower low.
Previous, you mean this one's here?
Yes, sir. What make that lower low that is invalid?
What makes this guy here?
What make invalid?
Okay. Now we have lower high here, right?
Yes, sir.
Okay. We have this lower high here, isn't it? Now, this lower low here.
Yes, sir.
Well, if this guy is a lower low. Now, but do you agree that this guy is a lower high? First of all, is this guy a lower high?
No, sir. No, sir.
Okay. You agree that here is not a lower high, isn't it?
Yes, sir.
Okay, so now, but here's not a lower high. It's a question for it's a question.
Hello, I didn't get you, sir.
I said,
Hello,
if
sir.
here is not, I said, we were agreeing that, yeah, I can hear you, fam. I can hear you.
All right, sir.
Sir, I can't see your cursor.
You said, you can't see my cursor?
Yes, sir.
Okay. Can you see it now? Can you see it now, fam? Can you see it?
Yes, sir, I can
Yes,
see it,
yes,
sir.
yes, yes, sir. We can see this, sir.
Okay, all right. So, like we were saying, we have, here is our what? Our lower high, right? Now, I said, if here is a lower low, then this bad boy here, this guy here, is it a lower high? That's the question I asked.
No, sir.
Oh, no, right?
Yes, sir.
You said no, right?
Yes, sir. Yes, sir.
Sorry, I can't hear you.
Yes, sir.
Okay, now, all right, okay, all right. So you agree? You are saying that this guy here is a lower high, isn't it?
No, sir.
No. Okay, that means this here is not a valid lower high. Now, it's a human. When, let's say, a human being with a head without a leg, is this a complete human being?
No, sir.
Or
Sir, let me decide.
or handicapped?
Yes, sir.
All right. So it's actually, since it's within the structure, because if you are saying, for example, if you're saying that this guy here, it's this bad boy here, actually before Price took out this lower high, this guy here was actually a lower low. But now that Price took out this guy here, now making this one here an invalid lower high. Since this guy here was invalid, then that means this lower low is what? An invalid what? Lower low. So this should be your what? Your lower high here, and this guy here is what? Your lower low. And you have your lower high here, a lower low. But if this guy would have rejected from here, then we'll have what? A lower high, a lower low, a lower high, a lower low. Then from there, lower high, just like that. But since this bad boy was invalidated, then definitely this guy here is what? It's not a valid what? Valid.
Lower low.
A man with a head and without a leg is incomplete, or leg without a head also what? Incomplete. All right. So do you understand now, fam?
Yes, I will understand, sir. I understand, sir.
All right. Any other question? So, like I was saying, for me, I'll be looking out for this. Though I'm looking out for this. But if I don't have that change of character, like if I don't have price closing above this high here, see, that's easy way to trade with market structure. Very easy. If price can give me a break above this guy, then I'll take what? The resulting retest to the upside. But if not, then that means this guy is giving me a series of what? Lower highs, lower lows, lower highs, lower lows to clear all this bad boy. So structure is key. Please let's learn structure. If after you can watch this video over and over and over again, So more questions. We still have
Yes, sir.
5 minutes for questions. Okay,
That's like
fam.
1,000, sir.
Okay. Please don't use this teaching to go and take a trade. We are just teaching you guys here. This is not a trade call. Okay? So don't worry we're having trade calls week in, week out. So you don't have to rush things. Crash 1,000. Here we are. Okay, somebody was asking for Crest 1000.
Yes, sir. It
All
has
right,
formed
fam.
lower low, sir.
It has
On the
formed.
daily. On the daily.
Okay, you mean okay, you mean on the daily, okay. On the daily. All right. What has formed lower low?
Now, the crash 1000. It has
What
formed
what has
lower low.
formed lower low?
Eh?
Where is the lower low, fam?
On the daily, sir.
Okay, on this is daily.
Yes, sir.
Okay.
This swing low.
This one here.
No. This one.
This one.
By the left.
This one.
Yes, sir.
Yeah, that's a low actually. That's a low actually, yeah. It's a low.
And now it's consolidating. It has not formed any other lower high.
Yeah, it's consolidating. Okay, so what's your question? What's your question?
I'm confused about the direction it is heading now.
You are confused about. Are you asking me? Okay, you are telling me to tell you the next direction of the market. Is that what you're asking?
Yes, sir.
Okay. You want us to show you the next direction of the market? Actually, this is not a trade call. This not a trade. We're not giving out trades here. I'm just lecturing you guys on market structure for now.
Yes, sir. It's the structure I'm asking about.
Okay, the structure. Now, if you look at the structure, this structure is very, very bearish. The structure is still very, very bearish. In as much as we've had this change of character, mind you, just because you have a change of character at a POI does not mean that overall trend has changed. This structure is still very, very bearish. Very, very, very bearish. Right? Here you can see if we are to mark this guy out, we have a lower high here, lower low, lower high here, lower low. Then this guy here is now what the lower high. This guy here was actually the lower high before, but it was invalidated by what? By this bad boy. By this move up. Alright? So now the reason why I told you guys, now mind you see, the reason why I say because you have a change of market character does not mean that the overall trend has changed. First of all, here we had lower high, lower low, lower high, lower low, lower high, lower low. Price came all the way up to what? To actually change character. That is broke structure here. But on coming back, it validated it because the overall trend is still what? Very, very bearish. Sorry, somebody's asking a question. You said what? Sorry, I'm coming. Don't worry, the class will be dropped, fam. It will be dropped. Look up, it will be dropped, fam. It will be dropped. Okay, so fam, so like I was saying here, it's still what? We still have this guy here is still very, very bearish. Even though we've had this BOS here, but the overall structure is what? Is bearish. So now looking at, since we agree that market moves from one swing point to the other, what we understand structurally, market moves from one swing point to the other. So the last valid lower high is what? Is this bad boy here. Alright? Any other question? Any other question?
Hello, coach.
Yes, fam.
I have a question, sir.
Yes, fam. I'm with you.
That 300, volatility 100.
The 100x, right?
Yes. The previous
Okay.
one.
Want us to go back?
Yes, sir. Sir, on this one, sir, you tell us that
I'm with you, fam.
if you want to take the
take profit, no, stop loss. So now you told us that advisable to take our stop loss at higher time frame. But this one, sir, the lower high and our lower low here, can we advisable? Is it advisable to still take our TP at lower low here? Because now when you go back to lower time frame,
yeah, I get your question. I get your question fully, fam. I get the question. No, I got your question. You see,
okay, sir.
If you are actually to put your stop loss, remember, please don't get this wrong. Okay, you mean if you're actually taking your entries from here, right? Isn't it?
Yes, sir. Yes.
Okay. Is it advisable to put your TP at this lower low, right?
Yes, if you want to, yes.
Yes, exactly, fam. Exactly. You can do that because yes, you can do that structurally. If you are taking an entry from here, then your take profit should be at the range low. I think we had analysis like that on GPUSD. I think that sell is still the sell that is still going on currently on GPUSD. For the mentees, if you guys can remember, the G we had, I think earlier this year, that sell set up. Now we took that trade from the weekly time frame and we analyzed it down to the 1 hour time frame. Imagine if we had held that sell from that time all the way till now. So if probably, although you'll be having series of ups and downs, but taking an entry from here as a structural as a value swing point on the daily, then your take profit should be what at this. That's why you see. I think I have a friend. It's a friend of mine who held VIX 10. He held VIX 10 buy for like I think 3 months. Yeah, for 3 months. For like 3 months. Mm-hmm.
Okay.
Yeah.
All right. Thanks, coach.
Yes, fam. Pastor Dami. Pastor Dami, this one you are calling me. Do you have anything for me? Yeah, I don't believe actually. So any other question, fam? Any other question? Sorry, the video should be dropped. The video should be dropped. Okay. Mr. Daniel, it will be dropped. Evening, fam.
Good evening, sir.
Evening, fam. I'm with you, fam.
Those swing traders that are holding trades for weeks, currency
yes,
pairs,
fam. Mm-hmm.
Is structure not affected by fundamental analysis on the higher time frame?
Okay, structures are sometimes affected by fundamental analysis. Okay, but one thing they always do is fundamental analysis also respects structure. In most cases, you will see after taking you out, you see that long rejection, that long week. They'll come back to what still respect structure after the news matter had effect on the current market. Okay, so fundamental analysis actually affects structure, but in most cases they respect structure back because you know that we don't consider weeks when analyzing structures. We consider the full candle bodies. So definitely, in most cases, you see these guys they just come, they take you out and still respect structure using the candle bodies. Okay, and you see those swing traders, just like we analyze GPUSD. Analyze GPUSD, I think late January this year or February from the weekly time frame, and that sell has been on till date. Also, we analyze USD CAD where we had a bullish harmonic pattern. That buy is what from the day time frame. that buy is still that buy that's going on now. So for swing traders, that's what they do. They wait for example, if I trade with somebody else alone, I can wait. I can be very patient. Like I'll wait patiently for this bad boy to get all the way here. Now when it gets here, I'll just put my entry, stop loss here, TP here, and close my MT5. I'll close my MT5. Okay, so that's what swing traders do. They go to higher time frames, look out for swing points, mark out that points, and they wait for price to get there. And you see, this thing is actually very simple to do, but because you see, at least one needs money to like. Nigeria is hard these days. One needs Sorry, can you guys hear me? Okay, so that's why I see some of us still like go to the market and like day trading stuff. But if you want to be a swing trader, it's very easy. Go to a hard time frame, identify those swing points, mark them out, and wait patiently for those points. When price comes, if you trade like that, then in a year you shouldn't lose. If you take like 10 trades, you should probably not lose more than two trades. Yeah. Swing trading is very, very profitable. Very, very profitable. Very, very. All right, fam. I think that'll be all for tonight. So, like I said, the main classes for this bootcamp comes up tomorrow and next tomorrow. That is that strategy that you can use to profit from the synthetic indices market and also the forex market. And also, as I said, for the extra day, we'll be having the CEO of FT Nigeria with us. Okay, so very, very important. I really want him to be part of us so that we can ask him questions, all those questions that you guys have to ask FT Nigeria. How did they calculate their drawdowns, or how they combat the consistency rules and other rules that they have. So that day he will be giving us an insight to what FT Nigeria is all about. All right, and their modus operandi. Okay, so tomorrow we'll meet again, same time, same venue, same platform. Okay. So please, in absence of any other question, the videos will be dropped. All right. So don't worry about it. The videos, they are free. They'll be dropped. Okay. So for those of us that missed out, we can actually get to watch the videos. All right. They'll be dropped. So if you enjoyed today's class, drop a 111 on the chat. If you actually enjoyed today's class, 1 on the chat. 1 on the chat. Let's appreciate God for the wonderful opportunity. Okay. Thank you, farms. One love, farms. One love. So tomorrow it's a day of Tehim. Let's get ready for tomorrow. Let's get ready for tomorrow. So farms, on behalf of VTN and all the VTN family, I want to say a big thank you for all of you for taking out time to join us tonight. So we'll see you guys tomorrow. Enjoy the rest of the night, farms. Good night.
Good night, sir. Thank you, sir. God bless.
Good night, coach. Thank you very much.
Thank you, sir.
Good night, coach. Thank you, sir.